Hi, my name is Iain Craig. I'm a tax partner with BDO in Auckland, and I like to call myself BDO's eye on tax for obvious reasons. So there are a few days to go until the Minister of Revenue issues his Budget 2016. So what do we expect in that budget? Well, at BDO we expect a steady as you go, no surprises budget. This would be in keeping with his past 7 budgets and a trend in recent times, as there have been very few budgets where there have been major tax changes announced on budget day. That's not to say that we don't have tax changes happening at the present, as 2 recent announcements have been made. One, a bumper bill covering major reforms of closely held companies, small business companies, and some international tax issues. Also an announcement on SME tax proposals, where the Inland Revenue's own transformation programme is looking to make it easier for small and medium-sized enterprises to comply with their tax obligations. So we expect the Minister to comment on both of those aspects, both of those bills, but not introduce any major new changes in that area. We do expect the Minister to focus on and address and comment on the multinational corporations and react to the focus of recent worldwide media attention on the amount of tax that major corporations pay in each country. There's little or no doubt that the Minister will have to address the question of whether multinational corporations are paying their fair share of tax on income generated from New Zealand. There is worldwide speculation over how much tax a multinational pays in each country, and New Zealand participates and contributes to that discussion through the OECD and the Base Erosion and Profit Shifting Programme. We would expect some announcement in relation to that programme and when it is likely to be implemented in New Zealand. This was an area that our survey clearly indicated there was an overwhelming concern by respondents to make sure it's addressed. Inland Revenue have already had considerable success when funds have been allocated to a specific programme, such as the Property Compliance Programme, which has resulted in increased revenue from property transactions, both in collecting GST and in the area of income tax. On a similar theme, but with a slightly different focus, our survey also indicated a strong concern to make sure that Inland Revenue had sufficient resources to combat tax evasion and the black economy. I think this reflects New Zealand's desire to ensure that everyone pays their fair share of tax, depending on their circumstances. Our survey also indicated a strong desire to encourage the Inland Revenue to continue with its digital and business transformation process. Interestingly, there was no desire in our survey for a new capital gains tax, which seems to be consistent with the broad-based low-rate tax system where tax rates are aligned. We do not expect any surprises in this budget in 2016, but we do expect the Minister to provide an informative update on the status of current tax reforms and the transformation of Inland Revenue.